Hi, it's Paddy Hirsch at Marketplace. 3 years ago today, Lehman Brothers filed for bankruptcy. Bad news for Lehman and for its employees, but really bad for the US and indeed for the global financial system. But in order to understand what killed Lehman Brothers, we've got to take you 6 months before to March of 2008 when another investment bank died for pretty much the same reasons, and that was Bear Stearns. So explaining what kills an investment bank isn't an easy thing to do. So I recruited a comics journalist called Dan Archer to help me. So he produced an excellent little short film which you're about to see called Who Killed Bear Stearns?
In March 2008, New York-based Bear Stearns was left bleeding in the streets of Midtown Manhattan. 3 bullets slammed into the grizzled giant, cheap money, bad loans, and a liquidity crisis. The first bullet, cheap money. After the tech bubble burst in 2000, the US government cut interest rates from 6.5% in May to 1.75% in December 2001. Lending standards fell too, making it a lot easier and cheaper to borrow money. By 2005, anyone who could fog a mirror qualified for a loan. But many of those loans had adjustable rates of interest, and many borrowers found they couldn't afford to pay the higher rate, so they stopped paying. The second bullet, bad loans and crumbling investments. When banks lend money to consumers, they get an IOU and an interest payment every month. But most banks don't keep those IOUs. They sell them to companies, like Bear Stearns. The IOUs are packaged into new investments called CDOs. CDOs work like a champagne bottle. Every month, the bottle fills with interest, which flows into the investor's glasses. When some of those borrowers can't pay, less interest flows out of the bottle, and a lot of those glasses stay empty. The third bullet, the liquidity crisis. Investment banks like Bear Stearns don't hold on to money, they invest it, so they don't have vaults full of cash to do the things that all businesses have to do, like paying salaries. They have to borrow that money from other banks in what's called the overnight market. But when those other banks saw how many of Bear's glasses were empty, they worried Bear might not pay them back, and they refused to lend it anything. And that's when it all got a bit grisly.
So now you know what it was that brought down the bear, you'll understand what took Lehman Brothers down too. These cheap loans, these bad investments, and this liquidity crisis, this lack of trust that rippled through the financial system, took Lehman Brothers down and in actual fact nearly crashed the entire global financial system. Now, in order to understand how that all played out, Dan Archer very kindly produced an excellent comic strip for us, which walks us through the chronology the whole way from March 2008, after the demise of Bear, all the way through to the beginning of this year. You can see that on our website, marketplace.org/whiteboard. It's right here if you're on the website now. If not, please go to the website and check it out. It's a great comic strip, but it is a horror story that could leave you very badly needing a drink.